Good morning and welcome. Patriot Radio News Hour, Joe and Jason on this Tuesday. I hope it finds you well out there as we're waiting for Jackson Hole. Yes, that'll be, well, it starts Thursday. We'll hear from Jay Powell on Friday, but we got some interesting things happening before then. Got gold, a new all-time record high as it continues to climb. The dollar continuing. Matter of fact, I want to say the dollar is the lowest of the year right now with the dollar. Everyone expecting rate cuts to be coming. We'll wait and see on all of that, but gold is definitely leading the way here. Our toll-free number, 800-951-0592, the website at allamericangold.com. And, of course, what we do, the physical delivery of wealth insurance. Talking about gold and silver, I will say this tomorrow for you silver guys. Tomorrow's going to be a show you're going to want to catch early. We're going to have we'll have a few cool silver coins, but definitely if you're looking to get into the silver market, we'll give you that opportunity tomorrow. Today, it's going to be all about gold and getting your wealth protected as some interesting things coming to light. So tomorrow, we're supposed to get the, what do we want to call it? The accurate jobs prediction, the actual jobs created versus the predictions that we're getting, depending on who you ask. Nobody has the jobs number being revised higher. So that's not going to happen according to the people that follow this. Everybody is saying the jobs numbers are going to be revised lower. And I guess the question is going to be how low. Right now, the average estimate is for the jobs to be revised down by 600,000 jobs. In other words, what they said were created wasn't quite that, about 50,000 jobs a month. But, Jason, it goes anywhere from 360,000 less jobs. Goldman Sachs says we could see 1 million less jobs. And that kind of changes the picture of things. And it's one of those things where the higher this number is, I think the more dovish we'll see Jay Powell on Friday. So this could be something where, I remember when gold, and I forget, was it gold broke 2,100, then it went right to 22. I think it went right to 23. We could absolutely see $2,600 gold by Friday if this number comes in, like I said, anywhere close to, 500, 600, 1 million less jobs than what the government said. Of course, remember, a lot of these jobs were the birth-death model. And for those of you that don't know what that is, the government, every month, the first Friday of the month, the government tells you how many jobs were created for the preceding month. So the first Friday in September, as an example, the government will come out and tell us how many jobs got created in August. The big piece of that number, we call it the birth-death model. I don't know who invented it. Somebody invented it, right? Somebody in the government, because they want to make the numbers appear better than what they are. And what this model does is it says, well, we think that X amount of jobs were created, but we just don't know about it. If you go back to the last month's job report, all of the jobs created last month were created by the birth-death model. So normally this model can be anywhere from 100,000 to 250,000 jobs. It's a lot. It's a big number. And Jason, at least according to, and I don't care which bank you pick, J.P. Morgan, Wells Fargo, Goldman, B of A, apparently this model has overstated it by a big number. So we'll have to wait and see. But that's on deck for tomorrow. So it's going to be something where instead of waiting for Friday, I think tomorrow could be a big indication of what we're going to hear in Jackson Hole on Friday.
Well, and Joe, we'll see what happens. You said gold 2,600 by Friday is very realistic from what I'm seeing going on. It's took a nice big pop today. Came back a few bucks. I saw 25.25 for a while. So it looked like it was holding. What is it, 25.20? Yeah, we have a big. Here's the other thing: if we have a big Friday and blow past 2,600, then watch out the next week. If we have an update of the following Monday, we could have 2,700 by the following Friday, and it can just move just like that. I mean, we just watched it, right? In March and April, we watched it just blow up from 2,000 to 2,400, and now here we are at 2,500, Joe.
Yeah, and it's been as high as 25.30, and, of course, TV gold. I want to say it was 25.7, and that's a contract we're watching when we're talking $2,600 gold. You got to look at that December contract. That is the one that all the markets are trading at right now. It's just kind of interesting. I figured anyway, that we would get a revision down in jobs created, but these numbers being talked about today, up to 1 million less jobs, that changes things quite a bit. We'll have to see. I don't know. I mean, hey, they could all be wrong, right? We don't know, but we'll have to wait. Something else popping up on the radar. Go figure. We'll be right back. 800-951-0592. Patriot Radio News Hour. Joe and Jason here on this Tuesday. The Dow, pretty quiet today, down 75. The S&P's down 13. The Nasdaq's down 75. The 10-year note down to 383. And I think a lot of that is in anticipation of how big will be the revision to the jobs number tomorrow. If it's over 500,000, which, by the way, is, I think the consensus is 600,000. That would be the biggest revision in over 15 years. So we normally don't see these types of revisions. We'll have to wait and see how it plays out. Right now, gold's up 9. TV go 25.50 right now on that December contract. It's been, like I said, as high as 25.70. Silver is higher as well today. 29.5 on silver. And again, we keep talking about this. Being more diversified than you've ever been. Because these markets are the most dangerous they've ever been. And why do I say, why is it more dangerous today than before the financial crisis, as an example? And the answer is really easy to understand. It's the amount of debt. See, the bigger the debt pile gets, the more risky it becomes, right? Because we talk about, the debt house of cards, right? That's really what the fiat money system is. And it's interesting that we've decided, I say we didn't decide. The bankers decided when they loaded the Congress with their friends and their relatives and voted back in a central bank in 1913 it came into fruition, but they really got it done around 1910. But what they didn't tell you about the fiat money system. See, we didn't invent fiat money. I know that's hard for some people to believe. The Chinese were actually the first to do it. But I want to say, was it 1200? Something like that, when the first Chinese paper fiat money came into existence. And there's been hundreds and hundreds and hundreds, maybe thousands of them since then. Guess what, guys? They all go to zero. Every single one of them. There's no exception. It's never happened. And it seems kind of stupid, doesn't it? Well, gosh, why would we have picked that? Right? Why would we have picked that? But that's what the bankers wanted, right? Because that's how they made money. Well, we make money by what? By having more debt. Putting you into debt. And they've set up the system to take advantage when it collapses. Don't worry. They've already got the new one ready to go, right? We know the digital currency is on its way. But all of the assets that they told you, right? Oh my gosh, you have to have the 401k, the IRA, and you got to have your stocks and your bonds and your bank accounts. They've got it all set to take it away from you. That's why you need to be more diversified today than you've ever been. That's why I keep telling you, hey, check out Y-Refi. Just check it out. If you got $50,000 or more, you get up to 10.25% fixed rate of return, not correlated to Wall Street. I know, and you're like, well, gosh, Joe, Wall Street's been pretty. I mean, the Dow's still 40,000. Yeah. Remember what happened the last bubble, the financial crisis bubble. What did they end up losing? 60%? Make sure that you don't follow the same path again this time. Check them out. InvestYRefi.com. That's the word invest, the letter Y, REFY.com. Or just call them. 888-YRefi-24. Jason, we heard from Lowe's today. Now, remember that last week we got that ridiculously great retail sales number, and I was like, how does that make sense? By the way, see General Motors laying off? Yeah, car business kind of stinks. Lowe said same-store sales fell more than expected, down 5.5% year over year, and then they said, oh, by the way, we expect sales to fall another 4% between now and the end of the year. They've reduced their forecast, right? They've reduced their profits. Just another sign that the consumer has stopped spending. And Lowe's is saying, hey, everybody's holding off. Everybody's waiting for lower interest rates. And I don't know that that's right. Hey, listen, you need a washer and dryer. You need a new roof on your house. You need this stuff. It doesn't matter what the rates are. But at least that's the line coming from the consumer sector. And I think Jason, they want to put pressure on Jay Powell to cut these rates because they're saying, hey, listen, things are slowing down and slowing down faster than a lot of people thought.
Plus, maybe a little cushion for the election, right? Make sure things stay kind of somewhat so-called nice, to get through the election, so you can't point the finger at the financial people for causing one guy to win or one guy to lose, so to speak. So I think a rate reduction in September looks likely, Joe. I think it's likely, maybe twice this year, as you've been saying, but I think after that, I wouldn't be surprised if it's going back up in 2025. And I wouldn't be surprised if things get a little out of their control and they don't reduce the rates at all. But right now, things look like, the average person watching the news is like, everything's fine. We're waiting for the election, and people are distracted. So I think the rate reduction kind of keeps the markets happy, keeps Wall Street happy, and gets us into 2025. And then it's like, no holds barred then, right? Anything goes after the election.
It's going to be interesting. I mean, I know at least the data that we've seen, if it's to be believed, and of course we're talking about a big jobs reset, but the numbers don't say rate cut. They don't. I mean, let's be honest. Even the jobs number from last month, it was still over 100,000. I mean, if they if they whack 1 million jobs tomorrow and say, well, we created 1 million less jobs, which I have a hard time believing. Granted, now I live in Arizona, and we're one of the booming places, but things have definitely slowed here. But there was a lot of hiring going on. At least I think there was, and even if it was the million, it would still be the 12-month average would go from like 250,000 to 150,000. I mean, that'd be a big drop, but still, that's not terrible. I mean, that's still a lot of growth. It's something for me that this is just what I believe. There's something that we don't have visibility to as the reason for the Fed to start cutting. It's not jobs, unemployment. It's not GDP or retail sales, at least not what they're showing us. Has to be something else, right? And I don't know. Is it an issue in the Treasury market? Is it an issue in regional banks' balance sheets? Is it an issue with Japan, or is it an issue in Europe? I don't know. Maybe even in China. I don't know. But remember, what was it, 2 weeks ago? Remember oh my gosh, the panic, the Nikkei fell 12% in a single day? That was a warning shot. That was a warning shot of how delicate this situation really is. And when we start looking at, like, interest on the debt, even if we went to 2%, which nobody's calling for 2%, right? Everyone's saying, hey, they're going to cut twice, 3 times. And, a couple of people said, hey, they're going to cut rates 6 times, which would be like 1.5 points. That would put it to 4%. But at 2%, the interest on the debt would be $1.2 trillion. See, the problem is at 5%, the interest on the debt's $1.6 trillion. And this year, listen, the interest this year, because you got to remember the fiscal year ends in September. I think it's going to be 1.1. The projection for next year is 1.6. So that's a $500 billion increase in the debt with nobody done anything. This tells you the problem here. And I understand that the markets want rate cuts. Remember that day 2 weeks ago, people were going on TV. Nobel laureates were going on TV and demanding an emergency rate cut of 75 basis points. That's like, what are these people talking about when you hear those things? Because I'm going to tell you right now, that was lunacy for the numbers we get to see. The problem that I have, the thing that I worry about, Jason, is I don't think it's lunacy for the things they don't want us to see. And that's where we've got to be worried about. That's the, they call them black swans. Oh, it's a black swan event. Right? We didn't see it coming. I think they do see it coming, and they just don't want us to know what it is. I mean, that's just how I look at it right now. I don't know where you sit on it, because we start cutting rates. Let me just ask, if the economy did pick up, I don't know that it will, but let's just say it did. Right, all of a sudden, people started to buy more cars again. People started to buy houses again. I mean, Jason, that will bring inflation back. I mean, that's what we'll have. I mean, I know that's kind of what you've been predicting is, hey, they lower these rates, we're going to have an inflation problem again next year.
We're going to have an inflation problem no matter what they do, unless they raise the rates dramatically. So if they want to stay with this, stay the same, or lower the rates a little bit, the inflation's coming back because the government's ready to spend in a way that we've never seen before. They're waiting for the election. it doesn't matter who wins. The government's going to spend in a massive way, and they're just they're taking a pause here just to get this election out of the way. Whoever's chosen to be president, they'll put that guy in place, and then it's going to be a big, huge amount of spending, and then it's going to be inflation, and it's not going to stop. And Joe, I believe they're going to have to raise rates slowly, and maybe even quickly, depending on what happens. And they're going to have to spend, Joe. How are they going to pay for this stuff? They have to pay for this stuff. They're going to print the money. They're going to they're going to come up with new schemes and new 12-letter words for the new Fed scheme or the new Treasury scheme of how they're going to pay for this or fund that or some facility where they hold money. How many shells are in the shell game now, right, Joe? The tools in the toolbox, so to speak. And spend. And we'll see what happens with the rate reduction. We'll see what happens, Joe. We'll see what happens. Inflation could just come roaring back on. What they say, in a half point in September. Is that what they're going to do? They're going to lower it by a half point in September.
Well, I don't see it. I don't. But again, I don't know where the I guess the itch is. If we get a half a point in September, we've got a bigger problem than I even thought. Patriot Radio News Hour. We'll be back right after the break. 800-951-0592, Patriot Radio News Hour. Joe and Jason here on this Tuesday. It's a new record high for gold today. We'll see where it closes. But yesterday we talked about 2550 on that December contract. We've broken through that. Now we're looking 2600. We're going to wait for these job revisions. But that's short term. Right? Who knows? We when we talk about gold and silver, we talk about current things that could drive this price. Hey, this could drive gold tomorrow. Right? This jobs revision. How bad is it? If it's not bad, right, then we'll probably stay in this 2,500, 2,550 range. If it's a big number, then okay, we're probably going to be talking 2,600, and then we'll wait for Jay Powell on Friday. But when we look longer than that, and we start talking about inventories, how much product is out there, what's really available, what is the demand going to be, huge news. India, the second largest gold consumer in the world, just a couple of weeks ago, they announced they slashed the tariffs on gold. And that's a big deal. And India, listen, they wanted their people to buy less gold. And that's why these tariffs, they raised them, I don't even know, 10, 15 years ago. I remember them raising them. They've had a change of heart. Matter of fact, the Central Bank of India has been repatriating all of its gold. They've been consistently adding to the gold holdings. And now they're saying that for the rest of the year, the World Gold Council said that, hey, they're going to add another 50 tons on top of what they already had forecasted India to buy. And they're saying that a 6% drop in import duties has India flocking to gold again, Jason. And this is going to be another one of these signs. Supply is already tight. And India, a huge buyer, and now the World Gold Council had to come out last night and say, hey, guess what? They're probably going to buy at least another 50 tons on top of, China or India. They buy close to 1,000 metric tons a year. So you figure rest of the year, they're probably thinking, hey, they're going to buy, another 400 tons. Jason, that's over 10% more that they're saying they're going to be buying. And then on top of that, China's issue, so China's housing's China's having like a housing market like we had back during the financial crisis. Gold demand in China through the roof. They're saying that not only do we know about the banks in China, the central bank in China, they're talking about the average Chinese citizen saying that gold demand in China up 93%. I mean, that's just unheard of when we start looking at what's going to be driving, gold prices. We keep talking about, hey, I think gold's going to hit $2,700 this year. I mean, it's going to be $3,000 next year. Jason, it has nothing to do with the jobs revision tomorrow. It has nothing to do with what Jay Powell's going to have to say at Jackson Hole on Friday. Well, I shouldn't say nothing, but a tiny bit. What this really has to do with is the lack of faith in the fiat money system. That is what is happening. Don't be fooled. Why are these central banks? Why did India bring its gold home? Why is India buying gold? Why is China buying? Why is everybody pretty much in the world bringing their gold home and adding to their gold holdings? It's a lack of faith in this fiat money system. I say it all the time. Be your own central bank. See, well, you know what these central banks know? Well, if we don't hold it, we don't own it. Right? Ask Venezuela. Ask Russia, right? If we don't hold it, we don't own it. Yeah, they want to hold it. You need to be holding it as well. Yesterday, I ran, it was a ridiculous special on $20 gold pieces at $2,695. Gold's up again today. I'm going to give you one more day to cash in. Yesterday, it was a $45 difference. Today, it's $85 off. $85 off. Right now, regular price on a 20 today should be $2,780. $2,695, and I'm telling you right now, if you could only afford one, get one. If you can afford 100, get 100 of them, because, Jason, the market is telling you. It's screaming at you that they're losing faith in the fiat system. Why do you think this will be the third straight year of record gold buying by central banks? There's only one reason to do it. There isn't another. There isn't another reason. Remember, gold doesn't pay interest. They don't care about interest. They don't care about interest. Because the fiat money system it's effed up. Right? We've hit that wall of, oh my gosh, there's just too much debt out there. I need to have something that I physically own that isn't a piece of paper. And, Jason, that's as simple as I can put it. I mean, that really is what is happening here. Because why not buy a treasury note, buy a 3-month treasury that yields 5%? Nah, we don't want to do that. Don't want that anymore. I don't want the fiat money anymore. I'm getting gold put away because I know what's coming. They know what's coming.
$2,695 sounds really expensive until it's $3,000. $2,695 for a $20 gold piece sounds really expensive until it's $4,000. These things are going to move very quickly. Gold is showing strength in places it doesn't show strength. Like when the markets are high, gold is high. When the markets are low, gold stays high. When there's inflation, gold stays high. Joe, it's showing strength in all situations. This is not 2011. This is not going to be, it hit a high and then it's going to go all the way down to $1,000. It's not happening. This is not the same situation, Joe.
Higher dollar, lower dollar, doesn't matter to gold right now. They're taking all comers. Patriot Radio News Hour will be back right after the break. 800-951-0592. $20 gold pieces, $2,695. huge savings today. Continue to get diversified. You should be running from this market, running to the phone right now because it's really happening quick. Don't forget, a few weeks ago, remember we talked about the digital euro, right? Remember that. Hey, they're ready now. We're ready. Today, the BRICS, another big announcement. Right now, the Russians are the chairperson for the BRICS. So kind of, every year a different country's in charge. They announced that they have made significant progress on a BRICS digital payment platform. The creation of the independent financial payment platform. They're calling it BRICS Bridge. BRICS Bridge is what they are calling this, a standalone mutual payment system on a firm joint platform. And the Russians and the central banks of the BRICS nations say that things are moving along very quickly. They're saying that other central banks, finance ministers of the BRICS country, including all new members. So this thing's going to get pretty big here very, very quickly. They're saying that the summit, the next summit, is when they're going to be releasing more details on this, but they're saying that this is going to disconnect them from the SWIFT system. This BRICS bridge payment system is going to allow all the BRICS nations to trade in currencies other than dollars. Jason, it's coming, right? Whether we like it or not, we talked about, listen, the dollar's not going away. But already, just going back to 2004, dollar usage is down 14% globally. That's just a fact. And the sad part is, it was just a trickle in 2005, 6, 7, 8, 9, 10, right? Jason, it's coming much quicker now than it was then. I mean, you're talking about the dollar losing like 1% a year. That's a big deal, especially when we talk about, hey, whoever the new president, let's face it, both of them, what are they talking about? Spending a lot more money.
You can almost make an argument the dollar has been pretty much gone for decades. I mean, you want your currency, you want your money, your country to be stronger and present opportunities, right, Joe? You want to live in a country that your children have a better opportunities than you did, right? And when's the last time we had a decade of economic prosperity that made it better than the previous decade, right? When's the last time we had something like that? You can kind of say the 80s, but the 80s is just because of spending. They spent like crazy, and by the time the 90s came along, what decade has been better than the previous decade? I would say the dollar's been on a slow death spiral this whole time, and on all these currencies worldwide, they're all mixed together. I mean, China, for as much of an economic enemy it is, they sure hold a lot of dollars, don't they, Joe? Yep. You know, the countries that don't like the dollar don't own them, right? China likes dollars at least a little bit, but they also want to push their currency all over the place. They want to balance it. China was so happy when it's getting close to a decade when they were put into the basket of currencies at the IMF, right, Joe? So they weren't even qualified. There was a qualifying.
Yeah, right.
So it's all mixed together. You know, the dollar doesn't dominate anymore. It's getting worse and getting worse and getting worse. And we have one indicator. All you have to look at, the price of gold versus the dollar is $2,500. What is it, $2,520? Oh, gold is too expensive. Your dollars suck. That's the problem you're having. It's getting all mixed up with all these other currencies across the world, and they want to spend all this other stuff and the BRICS and shit. It's all a game. It's all smoke and mirrors. And you are not holding things that hold value. You're holding their currencies. They laugh at you, Joe, right? They laugh at you for holding on to dollars for too long. It's like hot potato. Dollars should be hot potato, right, Joe? Everyone played hot potato. Yeah. When someone throws it to you, you have to grab it, you know. But then you throw it to somebody else as quick as you can. That's what dollars are. It's a currency. Get the hot potato into somebody else's hands. We take your hot potato and then we throw it into our account and get more gold and sell it to you. That's that, Joe. We don't hold on to tons of dollars for any length of time. We move it so we can move you into gold and silver, right?
Yeah, absolutely. 800-951-0592. So it looks like, listen, this is coming whether we want to or not. Like I said, the digital euro, they're saying it's coming out next year. It looks like now the BRICS bridge system, according to the Russians, that's going to be live probably next year as well. And a lot of things are pointing to next year, right? A lot of things are pointing to next year. It happens fast. That's not a lot of time. And I think the biggest part of this is, yes, as the rest of the world dumps dollars, gold price goes higher. Listen, gold should be higher today, right? Because the dollar's at a 7-month low. The dollar for most of this year was at the highs, right? I mean, it was all-time highs. And yet gold's up 30-something% in the last year.
Gold was also at all-time highs.
Right. It's not supposed to be that way, right? When the dollar is strong, gold's supposed to be. That's changed. This is a fundamental change in how people perceive the dollar. Wall Street can listen. Wall Street trade, they can pretend the dollar's strong or the dollar's weak. They can do that. But the world is telling them, hey, you can say what you want. The dollar, as far as fiat currency goes, like Jason said, it's no longer we're just holding it and happy to hold it. Nope, it's a hot potato now. We want to hold the least amount possible while we can. Picture Radio News Hour. We'll be back after the break. 800-951-0592. Joe and Jason on this Tuesday. Got gold at new record highs here. The Dow just kind of down 100 points, hanging out as we're waiting for tomorrow's jobs revision number, anywhere from 300,000 to 1 million less jobs. We'll find out. Don't know exactly. The bigger the number is, I think the more dovish Jay Powell will be allowed to be come Friday. And again, we're setting the stage here for rate cuts, right? That's what they need. Why do they need them? I don't know. That's the hard part. What I do know is what are people doing? And I'm not talking about, obviously China, they're going crazy for gold. India is going crazy for gold. A lot of places in the world, people are, like here in the U.S., I wouldn't call it crazy, right? We got a good mix of buying and selling going on right now because I think a lot of people, like Jason said, the election has gotten them, hey, I just want to wait and see. I think that works. Maybe it's worked in the past, right? I can wait and see here. I think this may be one of the more dangerous wait and sees that we've seen in remember the timing of it. Because, again, we're watching the rest of the world buy gold like never before. These are central banks buying it, right? These are sovereign wealth funds buying it. Right? I know the average citizen on the street, yeah, they're right, but this is something historically that does not happen. Doesn't happen. It hasn't happened since we closed the gold window in 1971. I mean, I remember when I started, central banks sold gold. The European central banks, after Great Britain sold all of its gold at $250, what a bonehead move that was. They came up with an agreement, hey, guys, we're only going to sell 500 metric tons a year between us. Do you know that every year since I want to say it was either 05 or 06. Central banks have been buying gold every single year. This has been long-term going on. And it hasn't been until the last 3 years that they've been shattering the record for the amount of gold they're buying. Do you think they're buying gold today because they think gold's going to be $2,000 next year or 5 years from now? No. They're buying it because they already know. I don't know what the price is going to be. You don't know what the price. They know already. Believe me, they know. They know. And that's the thing that I think is worrying me the most, Jason, because they're dying for these rate cuts. They have to have these rate cuts. Pretty much everyone in the world now, except for Japan, is cutting rates. Right?
They tried.
Right? They tried. Yeah, Japan tried not to, and look what happened. 800-951-0592. $20 gold pieces. $2,695. Yeah, you heard it right. Last day, tomorrow. Don't forget, another big silver